Pull out your phone right now. Open your bank statement. Count how many subscriptions you're paying for. Netflix, Spotify, YouTube Premium, iCloud, Adobe, Microsoft, your password manager, your VPN, Disney Plus. Add them up. Most people are paying $600 to $800 every single month. That's nearly $10,000 a year for things you don't own, and that vanished the second you stop paying. This is the exact model used by companies like Adobe and Salesforce. And when executed perfectly, it creates $187 million exits from businesses that were losing money just 3 years earlier. But the story of how this works involves a near-death experience, a revenue collapse of 99% in 1 month, and a business model so powerful that investors were willing to pay $380 million for a company that was losing $47 million a year. By the end of this video, you'll understand exactly why, and you might never look at your subscriptions the same way again. 2015, a software company just crossed $750,000 in revenue. The founder was celebrating. Profitable, growing, successful, but she had a problem she couldn't see yet, a problem that would nearly destroy everything within 18 months. She was selling software for $5,000 per company. One payment, you own it forever. She made $750,000 that year from 150 customers. The next year, those same customers paid her exactly $0 because they already owned it. To make the same money, she needed 150 completely new customers, and the year after that, another 150. Every single year, starting from scratch. Meanwhile, across town, a competitor was selling identical software. Same features, same market, but they were doing something different, charging $50 per month instead of $5,000 up front. Year one, both companies made $750,000. Year two, while the founder was scrambling to find new customers, the competitor's revenue was already at $1.4 million. Same customers, still paying. Year three, the competitor hit $2.8 million. The original founder still stuck at $750,000. By year four, the competitor was making $6 million, while our founder was on the edge of bankruptcy. What was the difference? And more importantly, what happened next would change everything. January 2017. After watching her competitor explode in growth, the founder made a decision that looked completely insane on paper. She killed her entire business model overnight. No more $5,000 one-time payments. From now on, everyone pays $50 per month. Existing customers, new customers, everyone. The math looked terrible. $5,000 immediately versus $50 per month. That's only $600 per year, an 88% revenue cut. But she'd seen the competitor's growth curve. She'd done the long-term projections. If customers stayed for 5 years, they'd pay $3,000. If they stayed for 10 years, $6,000. And if they expanded, adding more users, more features, that number could explode to $50,000 or even $150,000 from a single customer. So she flipped the switch. 2 weeks later, she checked her revenue dashboard and her hands started shaking. Last month, $75,000 in revenue. This month, $750, a 99% collapse. In 14 days, she opened her bank account, $18,000 in balance. Payroll due in 6 days, $45,000. She couldn't make payroll. She was going to lose everything. The company, the team, her reputation, everything. This is what's called the valley of death. And this is where most companies die when they try to switch to subscriptions. They run out of cash before the magic happens. But she had one advantage: enough funding to survive just long enough to see if the bet would pay off. The goal was simple: survive 90 days, then watch what happens. For the first 3 months, it felt like climbing a mountain barefoot. Every week was a fight for survival. Revenue trickling in at $750, then $1,300, then $2,150. But by month 12, something had shifted. The math had flipped completely. She was now making $11,200 per month. But here's what made her stop and stare at the screen. In that month, she'd only signed 25 new customers. That should have been $1,250 in revenue. The other $9,950, that was coming from customers she'd signed up 6, 8, 10 months ago, still paying automatically every single month. Almost 90% of her revenue was now passive, money flowing in from people she wasn't even talking to anymore. She wasn't selling anymore. She was collecting. The machine had started running itself, but then something even stranger started happening with those customers. 18 months after launching subscriptions, she was reviewing customer accounts and noticed something odd. A construction company that started at $50 per month in January 2017 was now paying $1,250 per month in July 2018, 25 times more, without her selling them anything. What happened? Month 1, the company signed up with 1 user, just testing it out. Month 6, It worked. They added their whole team, built custom reports, started integrating with other tools. Month 12, the software became essential. Their entire operation depended on it. Month 18, they needed premium features, API access, white label options, 17 total users. They'd gone from $50 to $1,250 per month, and she hadn't lifted a finger. But here's where it gets dark. That construction company had now uploaded 50,000 rows of data into the system, built 200 custom reports, trained 40 employees, integrated with a dozen other tools. They weren't just buying software anymore. They were pouring concrete around their own feet. When a competitor reached out offering the same software for 30% less, the construction company did the math on what it would cost to switch. Migrate all the data, rebuild all the reports, retrain all the employees, reconnect all the integrations. Total cost, $200,000. 6 months of chaos. Annual savings from the cheaper option, $3,600. They'd need 55 years just to break even on the switch, so they stayed. Not because the product was better, but because leaving had become impossible. Every report they'd built, every integration they'd added, every workflow they'd created, they'd been building their own cage, brick by brick, and now they were locked inside it. This is the dark secret of the subscription model. It's not just about recurring revenue. It's about making it impossible to leave. By 2019, the business looked completely different. Monthly revenue, $980,000. Monthly costs, $148,000. Profit margin, 85%. Same small team, same software, but 16 times the revenue with 85 cents of every dollar becoming pure profit. Why? Because software doesn't care how many people use it. You write the code once. Whether one person downloads it or 10,000, it's the same code. Costs barely increase while revenue explodes. In 2021, the company hit $6.8 million in annual revenue. Still unprofitable, losing $800,000 that year. Then Sequoia Capital made an offer, $82 million, 12 times revenue for a company losing money. Why would anyone pay that much? Because they weren't buying current revenue. They were buying future cash flow. Their analysts ran the projections. Year 5, $55 million in revenue, $36 million in annual profit, $36 million in profit every year, forever. Because 95% of customers couldn't leave. Because those customers kept expanding. Because the revenue was locked in and predictable. By year 7, the company would be worth $600 to $700 million to a tech giant like Salesforce or Adobe. Sequoia's return, 8 times their money in 7 years. Guaranteed. They took the deal. In 2024, Salesforce acquired the company for $680 million. The founder's stake, $187 million. From $50 per month to $187 million in 7 years. Here's what this reveals about the subscription model. Traditional business. Sell once, get paid once, start over tomorrow. Subscription model. Sell once, get paid forever. Revenue compounds automatically. But the real secret isn't the recurring revenue. It's the trap. Make customers so dependent that leaving costs more than staying. Let them build their business inside your product. Watch as every integration, every workflow, every custom report makes the cage stronger. Within 18 months, they're paying you 25 times more than when they started, and they can't leave even if they want to. This is why investors will pay $380 million for a company losing $47 million, because they know that in 5 years, it'll generate $36 million in annual profit. Forever. This is how you turn $50 per month into $187 million. Not by building better software, but by building a better trap. You might think this only applies to million-dollar construction companies. It doesn't. It applies to you. Every subscription you're paying for right now, Netflix, Spotify, Adobe, iCloud, they all work the same way. You think you can cancel anytime, but can you really? How many photos are in iCloud? How many playlists in Spotify? How many years of files in Google Drive? How many saved passwords? How many integrations with other apps? Try switching. See how long it takes. See what it costs. See how much you've poured concrete around your own feet without even realizing it. That's how SaaS makes money. Welcome to the subscription economy. You've been paying rent on your entire digital life, and someone just became a multimillionaire because of it.